Small caps have performed very good since the so-called Liberation Day, but you have to remember that came after a very, very long period of subpar performance. Most of that subpar performance was the result of earnings that weren't as good as a lot of the big companies that the S&P has in them. So the Russell 2000 and the other small cap indexes didn't provide any reason to really attract investors. Post Liberation Day, we were left with an asset class, the small cap asset class, that had pretty good valuations and uncertainty as you looked out for the earnings into the next year or to the end of that year as well. But as the second half of the year developed, it became clearer that maybe the earnings situation was going to be a lot better than most had thought. And with that, the stocks started to react. Interestingly, the micro caps led the performance, so they did even better than the small cap and the big cap. This again was the result of pretty much a situation where for 2 years, these companies really didn't do much in the way of investing, didn't do much in the way of hiring, and sort of waited out for better times to come. And what usually happens when that situation occurs is that small cap earnings appear to grow very, very fast, right? They appear to be up a lot. But you're really getting the result of the situation where the asset base has remained the same, but the revenues start to come in a little faster than everybody expects. And with that, margins grow, and with that, EPS grows, and with that, stock prices do better. And I think that is what you saw as we went into the second half of the year and clearly into the first half of 26 as well. We always try to be a little bit ahead of the curve, and we don't always get it right. But most times what we're really looking for is to take advantage of those low prices and those companies that are going to get the biggest kick from that perceived or actual earnings increase in the near future. So we can't forecast what small caps will do for the rest of the year or even after that. But what we can do is try to position ourselves to take advantage of what the market gives us right now. And we do that by trying to get the portfolio in a position that owns lots of cheap stocks, right? Good valuations, try to get merchandise at very, very good prices. And also ones where, at our best guess, we could try to figure out how their earnings will progress. And that'll be affected by a lot of things, right? It'll be affected by a lot of macro events where we have no idea what those macro events will work out to be, right? But if we assume that that momentum that started in the second half of 25 or keeps rolling into 26, the outlook could be pretty good, right? You've got, as we said before and numerous times, the pricing or where our starting point is has been favorable. Balance sheets are in good shape. Capital is available. So all of the ingredients for a successful investment in small cap are there. There are always left field events, energy prices, global conflicts. Things seem to pop up very, very quickly, but they also seem to go away very quickly as well. So if the underlying currents that helped us in the second half of 25 remain with us, we think that the outlook could be pretty good for small caps.